Hello, everyone. Thank you very much, and thank you very much for joining us once again. I believe everything is very clear and everyone can hear me. If you have any issue, then just drop me a message. If everything is fine, I am in need of clarification, confirmation from your side that I'm audible. So I believe everything is fine. We can start our webinar, and whatever we are discussing today, we are discussing tax on investment funds and its stakeholders. So we have already conducted around 70 webinar on this. This is the 70th webinar. So tax on investment fund. Now the question arises, what is investment fund and who are the stakeholders of investment fund and what is their related taxation? Assuming there are different parties and these different parties are party A, B, C, this is individual, this is a company, this is a company, they have some surplus funds. They wanted to invest these surplus funds anywhere. If they wanted to invest these surplus funds, what are they doing? They are creating pool. They are creating this pool. They are putting our funds there. Now the funds of party A are here, party B are here, party C are here. Keep in mind this is individual as we discussed, and this is a company, and this is a company as well. They are pooling the funds, and after pooling the funds are in at one place. Now they are not technical people, so they want someone to invest these funds somewhere. So funds has been pooled under here. Might be once they are pooling the funds, they are doing this pooling. They are registering this pooling as a unincorporated. This is a unincorporated partnership. There is a possibility this is a juridical person. This is the company like a juridical person, LLC. So once they are pooling the funds are coming at one place. Once the funds are coming at one place, might be A, B, and C. They have signed one unincorporated partnership agreement, or they are registering one company. Once they are registering this company, this is a juridical person assuming, and this company, now the funds are in the account of company or unincorporated partnership. As I mentioned, A, B, and C, they don't have the expertise. Once A, B, C, they don't have the expertise, they are finding someone, they are looking for someone who needs to come and manage this investment, manage this pool of funds. Once they are hiring this someone, this is a party D assuming. Party D is managing these funds on behalf of A, B, C. Now the funds are here. Party D is managing the funds. Party D is a manager. Party D, he is the management company, and this management company D, they are managing so many funds and they are further hiring the peoples who are advising party D. Assuming this is E, F, and G. So ABC have the money, they are creating the pool, they are creating the company, they are putting the money assets inside of this pool. This is called investment fund. This fund, it can be unincorporated partnership in between the A, B, and C, or it can be a juridical person, LLC company. This fund is being managed by D, as we discussed earlier. D is well occupied and D has further assistant their sub-advisor E, F, and G. Now the funds which are here, A, B, C, they are asking there should be some sort of security for these funds as well. They are appointing one person as a custodian of the funds, who is taking care of the funds as a custodian, not utilizing the funds, but as a custodian. E, F, G, H. H is a custodian. He is not utilizing the funds, but taking care of the security of the funds and assets. Now D is managing the funds on behalf of A, B, C, D. So these are the pool of the assets here. D is investing this pool anywhere here. This is assuming making investment in equity, making investment in real estate, making investment in different sector, creating portfolio. Once D is investing, assuming D is investing 100, once the D is investing 100, from this D is earning 150. Once D is earning this 150, 50 is the profit from the investment. From this 50, some portion of these funds will go to A, B, and C as an investor, because A, B, and C are the investors. They will get return from the fund on their proportionate share. ABC has invested the funds. ABC will get the share on proportionate basis from the funds. So 150 is the net return, assuming there is a gross return, and 100 is the cost. Remaining is the 50. Out of the 50, whatever the level of investment they have made, ABC will get some portion of the funds before distribution. This cost will go of D. D is the investment manager. Some portion will be given to D. Out of this, some portion will go to the custodians. So assuming D and custodian cost is 10 as well, remaining is 40. 40 will be distributed. 40 is the net income. This net income will be distributed between A, B, and C. So what we learned? We learned ABC has surplus money. They have created pool. They have created fund. They have hired one expert. They are managing the fund. These people are fund managers. So A, B, and C, these are the investors. If I'm asking who are the investors, A, B, and C, these are the investors. I'm asking what is fund? You are asking this is a fund. I'm asking what is the type of the fund? You said it can be unincorporated partnership, or it can be a juridical person. It can be further open-ended fund, closed-ended fund, public available fund, private available fund. So if this is a public available fund, means everybody can invest. This is available to the public. They can buy, they can invest into the fund. This is the public investment fund, public fund. If this is a private fund is only offered to the special investor. This is a private fund. If I'm asking this is the open-ended fund, means the redemption, the share capital of the funds can be increased, can be reduced. It all depends. Basically, then no approval is required. If I'm asking closed-ended fund means share capital will not change unless until the fund is being terminated. Otherwise, special approval is required from the authority to change the share capital of the funds. So ABC are the investors. Fund, it can be unincorporated partnership or juridical person. It can be open-ended, closed-ended. It can be public or private fund. And D, who is the managing this fund? This is called investment manager. These are the investment manager. A, B, C, these are the advisor to the D. I'm asking, these are the custodian. I'm asking, what is fund and the stakeholder? This is the fund. This is the fund. And who are the stakeholders? These all are the stakeholders. Investors are the stakeholders. Custodian is the stakeholder. Investment manager is the stakeholder. And who are the advisor to the investment? They all are the stakeholders. So our objective is to learn the taxability of the fund, taxability of the income of the investor, taxability of the income of the investment manager. Some portion we'll be discussing the guide as well. Some portion of the guide we'll be discussing today, and remaining portion of the guide we'll be discussing in our next webinar. What we'll be discussing today, we'll be discussing as it is a fund, different types of the funds, income of the investors, income of the investment managers, tax on the custodians, different types of income that we'll be discussing today with some illustrations. So just go, what is investment fund? I think we have already discussed what is investment fund. Basically, this is a special purpose vehicle where the investors are keeping their money and they are creating the pool and money is being invested somewhere. This is called investment fund. Stakeholders of investment fund, we have already discussed. Investors A, B, C, these are the investors, these are the stakeholders of the funds. Investment manager, D is the investment manager who is managing the funds on behalf of the investors. Investment sub-advisor E, F, and G in our previous example, these are the investment sub-advisors. Sponsor, the person who was responsible for establishing and overseeing it. Sorry, the person who was responsible, we did not discuss the sponsor. Basically, these are the people who are responsible for establishing and overseeing of the funds. Custodian or trustee, these are the people who are responsible for the assets of the fund. They are the custodian of the fund. They are not the users of the fund. Though this is investment fund and these are the stakeholders of investment fund. What is investment fund in the UAE? There are different funds that are available into the UAE. We'll discuss in the guide. And it can be classified into the public fund, which are available to the general public at large. Private fund not accessible to the wider public. Private funds are only offered to the professional investors. Open-ended funds, these are the funds, basically their share capital can be increased, their share capital can be reduced. This all depends on the redemption of the share capital or further injection of the share capital. As I mentioned earlier, approval is not required from the authority to increase or reduce the share capital. Closed-ended funds, the share capital cannot be increased or decreased unless the fund is being terminated or special approval is required. Based upon this, the share capital of the fund can be increased or decreased. Qualifying investment fund. Now, each investment fund cannot be a qualifying investment fund. FTA has given it has been written in the law as well. If certain conditions are being satisfied, then the investment fund can be classified as a qualifying investment fund. If these conditions are not being satisfied, then this is called not a qualifying investment fund. And the condition is, the first condition is when the fund is applying to the federal tax authority. The fund first of all get itself registered for corporate tax. Only the registered investment fund can apply to the FTA that they can claim exemption from the corporate tax. The first condition is basically, if I'm asking the only registered taxable person, a registered investment fund can apply to the authority to claim exemption from the corporate tax. It means the natural persons, unincorporated partnership, specifically unincorporated partnership cannot be registered for tax purposes because this is called transparent unregistered partnership. Income of the unregistered partnership will be taxable in the hand of the investors. So unincorporated partnership cannot be taxable person. If unregistered partnership cannot be taxable person, means this cannot apply to the FTA to claim exemption as qualifying investment fund. The first thing has been sorted out, that the unincorporated partnership investment fund can be in the form of unincorporated partnership. Yes, it can be, but investment fund which is registered as unincorporated partnership, the fund itself will not be subject to tax. Once the fund itself is not subject to tax, they cannot apply to the authority to claim the exemption. So the first thing decided, only the juridical persons will be qualifying investment fund. Natural person will not be, unincorporated partnership will not be. So the juridical person will be required to do, what are the juridical persons? LLC, LLP, public joint stock company, public shareholding company. These are the juridical persons. The juridical person for investment, first of all, they need to get the fund registered, which is called investment fund. Then they need to apply for the corporate tax registration of the fund. Now this is called tax registered investment fund or taxable investment fund. Then they need to meet the conditions. After meeting the condition, they need to apply to the FTA to claim exemption that the fund is not subject to corporate tax. If the FTA is approving their request or application, then it will be considered that the investment fund, tax registered investment fund, is a qualifying investment fund. Before approving, FTA will go through all the conditions, will check if the conditions of the fund are being met or not. What are those conditions? FTA will check. The first thing, The fund should be, investment fund should be a regulatory oversight condition. This is the first condition, regulatory oversight. The investment fund should be under the regulatory oversight. It can be body within the UAE or it can be a body out of the UAE. It should be a competent authority. In the UAE, the bodies that are managing the investment fund, there are three special categories. One is DIFC, second is ADGM, and third is out of the ADGM and out of the DIFC. The authority that is managing and monitoring the funds out of the DIFC and ADGM, this is called Security and Commodity Authority. In the DIFC, the authority that is responsible to manage the fund, this is called DFSA, Dubai Financial Services Authority. And the authority which is responsible to manage and monitor the funds within the ADGM, this is called Financial Services Regulatory Authority. So if the fund is being managed by the competent authority, this is the first condition. Investment fund is being managed by the regulatory competent authority. And we know that what the name of the authority is. Second condition, funds ownership. They are asking the fund should be listed on a recognized stock exchange, first condition, or the fund is available to the public. This is a diversity of ownership. Basically, the funds is not in the hands of specific people, few people. No, this is publicly listed, or this is in the publicly listed exchanges are Abu Dhabi Stock Exchange, ADX, Dubai Financial Market, DFM, or any competent stock exchange, basically of the equal standards out of the UAE, like Nasdaq, whatever, Nasdaq Dubai, or it can be out of the UAE as well. So the funds are registered on the stock exchange and these are available to the public, diversity of ownership. And third condition is the objective for which application is being submitted to the FTA. Objective is not to avoid the tax. If all these conditions are being satisfied, then the authorities can see, okay, they can approve. But before approving, they need to look into the specific decision. This decision is 81 of 2023. In this decision, Cabinet Decision 81 of 2023, FTA has given further condition. These conditions needs to be satisfied as well. And these are the conditions which are other than the real estate investment fund. We will be discussing the real estate investment fund in our coming webinar. So first three conditions that we have discussed, other than this, these are the conditions which are applicable other than the real estate investment fund. These conditions are the primary business of the investment fund is conducting the investment and related activities. They are not into manufacturing, service A, B, C, D. They are not doing any other business. The core is basically investment functions. And so far ownership is concerned, in the ownership, they are asking if there are 10 or less than 10 owners, then 30% of the portfolio is not being managed by those investors and their related parties. And if their ownership are more than 10 there, then they are asking 50% or more of the investment are not being managed by one party and its related party. This is diversification condition. Investment manager have at least 3 investment professionals, qualification professional people, and daily management is not being done by the investment investors. These are the conditions. If all these conditions are being satisfied, we have discussed 3 previous conditions and 4 conditions. If all these conditions are being satisfied, then corporate tax registered investment fund can apply to the FTA to claim exemption. This fund should be treated as a qualifying investment fund. And once FTA is approving after verifying these conditions, it will become qualifying investment fund. And qualifying investment fund, we know this, I think it has been written in the Article 10 of the law. Qualifying investment fund is not subject to corporate tax, but it's exempt, and income of the qualifying investment fund will be taxable in the hand of the investors. Now you will be thinking, your question will be, okay, unincorporated partnership fund is not subject to tax, income is taxable in the hand of the investors. Qualifying investment fund, this is not subject to tax, this is exempt, income is taxable in the hand of the investor. What is the difference? Basically, it has been written in the guide that they have treated this investment fund as a special purpose vehicle. regulated special purpose vehicle, because unincorporated partnership is not a regulated thing. Investment fund is a qualifying investment fund is a regulated. Once this is a regulated qualifying investment fund, they are treating is a special purpose vehicle, and based upon the neutrality, they are asking, this is like that the investment has been made by the investors directly, and income will be taxable in the hand of the investors. So this is the reason that they are asking the qualifying investment fund is exempt from the corporate tax. Income of the qualifying investment fund will be taxable in the hand of the investors, and it will be like to like comparison. If income is exempt, we'll be discussing this in our coming slide. We'll be discussing the treatment of income as well. So let me just summarize it. Basically, investment fund, these investment fund can be structured as an unincorporated partnership, or these investment funds can be structured as a legal person or juridical person. If the investment fund are structured as an unincorporated partnership, we know the partnership is not subject to tax. Income in the hand of the partner will be subject to tax unless and until these partners are applying to FT and asking this fund should be unincorporated partnership should be treated a taxable person, and FT is approving. Till that time, in unincorporated partnership will not be tax subject to tax. Income of the unincorporated partnership will be subject to tax in the hand of the partners. And as per law, there is no difference in between the individuals and unincorporated partnership. Now, if the fund has been structured as a juridical person, if there is a possibility this is a non-qualified investment fund or qualified. What is the non-qualifying investment fund? Means a juridical, legally structured fund which is not meeting the conditions that were discussed in the previous slide, 7 conditions, then it will be considered non-qualified investment fund. Non-qualified investment fund will be treated like a juridical person, like LLP, resident, non-resident, worldwide income subject to tax. Okay, if it is a non-resident, then UAE income subject to tax. Income pertains to the PE will be subject to tax. Next is in the UAE will be subject to tax. Income generating UAE sourced income will be subject to tax at 0% withholding tax. But the fund will be subject to tax. Investor itself will not be subject to tax. But if this is a qualifying investment fund, regulated, all these conditions are being satisfied, FT has approved this is a qualifying investment fund. The fund itself is exempt from the corporate tax. Fund will not be subject to tax. Net income in the hand of the investor will be subject to tax on proportionate basis. This is basically whatever we have discussed. Only juridical investment fund can be classified as a qualifying investment fund. Other than juridical person, other than non-juridical investment fund, they cannot be classified as a qualifying investment fund because they need to get themselves registered first, then they need to apply. A rationale of exempt and qualifying investment fund, I have already told you it will be treated like investment has been made by the investors directly and provided the neutrality that this is a direct investment by the investor and the fund will be treated a special purpose vehicle just to make the investment. Taxation of the investment fund. Treatment of investment fund. Unincorporated partnership, we know this like a natural person. If the unincorporated fund, investment fund, income up to 1 million will not, they will be exempt, they will not be subject to tax. Income more than 1 million, then income related to the worldwide business will be subject to tax. And they can claim small business relief as well if the income is more than 3 million. We know less than 3 million cash basis of accounting, more than 3 million, we know that what basis they need to apply, the income will be subject to tax. Juridical person, non-qualified investment fund, either treated will be like a juridical person, like if this is LLP, LLC, resident juridical person, worldwide income will be subject to tax. Non-resident person, then income P related to the P of the non-resident person, source or nexus in the UAE will be subject to tax. We are discussing qualifying investment fund, and fund itself is exempt. Now there is a possibility this qualifying investment fund is a resident qualifying investment fund or non-resident qualifying investment fund. If this is a resident qualifying investment fund, worldwide income will be exempt fund itself, but income in the hand of the investor will be subject to tax. When this income is being subject to tax in the hand of the investor, think like this. The fund is only a special purpose vehicle. If the fund is getting exempt income, means the investors are getting exempt income. If the funds are getting taxable income, means the investor is getting taxable income. So any income that is exempt in the funds, the same income will be exempt in the hand of investor as well. If the income is subject to tax, the same income will be subject to tax in the hand of investor as well. But before discussing this, investor, when they are investing into the investment fund, we need to know this investor is a individual investing from their personal capacity, or investor is non-individual not investing in their personal capacity, but special license is required to make an investment in the qualifying investment fund. If this is a qualifying investment fund, assuming, as I mentioned, investors, as we discussed earlier, A, B, and C. A, B, and C. If A has personal savings and A is investing into these funds, and A is not required any license to make an investment in this fund, so any return A is getting, it will not be subject to tax because this is the personal income of A. Now B, as I discussed, this is the company, C is the company. If B as a company is making investment into these funds, and B is required license to make an investment into this fund, then income will be subject to tax in the hand of C. Sorry, C. So C income can be exempt income. It can be taxable. This exemption and taxability exactly depend upon the nature of income of the funds. If the fund is getting exempt income, this income will be exempt in the hand of C. If the fund is getting taxable income, this income will be subject to tax in the hand of C. If A is making investment in a personal capacity from personal saving from where the license is not required, then income will not be subject to tax in the hand of A. So the resident, as I mentioned, worldwide income will be exempt, yes, as a fund. Income, exempt income taxable in the hand of investor. This is an exempt income. This income will be taxable in the hand of investor, and the criteria is, if investor doesn't need any license, then income will not be subject to tax in the hand of investor. Investor license is required, or investor is a company which is making investment, then exempt income will be exempt and taxable income will be taxable in the hand of investor. This I have mentioned under this. Basically, treatment for investor, purport share on net income. Are they required to do this activity? Are they required any license? No, then no tax will be applicable. I will discuss for you like this A. In the same way, if license is required or the investor is a separate standalone juridical person, might be this is a resident person or non-resident person, investor. Means this C can be resident, this C can be non-resident as well. If this C is a resident, exempt income will be exempt in the hand of investor, taxable income will be taxable, worldwide income will be subject to tax. If this C is a non-resident person, exempt income will remain exempt in the hand of the C, and taxable income we need to assess. This is related to the PE source or nexus into the UAE, and taxability based upon their nature pertain to the PE of the non-resident person, source for UAE sourced income or nexus in the UAE, it will be subject to tax based upon this criteria. Treatment for investment manager. Investment managers, they will be the juridical person for qualifying investment fund as well. Natural person cannot become the investment manager. Why I'm saying this? The reason is this third condition. They're saying the fund must be managed by an investment manager with at least 3 investment professionals. Means individual person will not be there. They need to register a company, and they should be under the supervision of competent authority. So I believe this clause, the investment manager will be only juridical person. It can be unincorporated partnership, might be 3 people are there, they are working, but in most of the cases it will be a juridical person for qualifying investment fund. Then they can be classified as a resident. Taxability will be straightforward, similar. This investment manager might be resident, non-resident. If the resident, worldwide income will be subject to tax. Non-resident, Then their income, whatever the income they will be getting, it will be subject to tax based upon the P source and nexus in the UE. And what type of income they will be getting, it has been given in the guide. Might be they are getting consultancy fee, SMS fee, performance fee, different types of income. It all depends upon the agreement with the investor, what type of income they are getting. The same treatment, by the way, it will be for the investment manager. We have discussed advisor, sponsors, and trustee, the same treat of investment, because these are the people who are getting fee for their services. The treatment will be same like the investment manager. Nature of income can be different. If exempt person hold investment in the qualifying investment fund, if the exempt person, okay, just look this, out of this is the investment fund. As we discussed earlier, three investors are there, A, B, and C. I'm asking these three is a government entity. Government itself exempt from the corporate tax. If so, for whatever the B is getting net share of income from the fund, this income will not be subject to tax in the hand of B. This is basically if exempt person hold investment in qualifying investment fund, the income will not be subject to tax in the hand of exempt person. Now, fund is required to prepare the financial statement. Once they are preparing the financial statement, audit condition will be as it is. Preparation of financial statement conditions are as it is, less than 3 million cash basis of accounting, 3 million to 50 million. They can apply IFRS for SMEs more than 50 million. They need to apply full-fledged IFRS. And if the revenue is more than 50 million, audit is compulsory. Less than 50 million, audit is not compulsory. So while preparing their financial statement, it has been written in the guide, they need to classify their income into four categories: exempt income, interest income, income from immutable property, and other income. Exempt income, we know they are getting dividend from the local juridical person or foreign juridical person under the participation exemption conditions. Interest income, general interest rule will be applicable. Income from the immutable property, we know there's any nexus in the UE in the form of immutable property, then any income they are getting from the is income from the immutable property. Any income means other than exempt income, interest income, or income from the immutable property. This is called my other income. So this income, out of this income, expenses needs to be deducted. Net income should be apportioned based upon the different person who are the investors. Time apportionment income, there is a chances that the tax period for the investor is different and tax period for the fund is different. It has been written in the guide, the period in which the tax period of the fund is ending, they need to classify the income on the proportionate of time basis. How much period is falling under the respective income category of the investor, they need to follow the time on proportionate basis, apportion the income on proportionate basis. Income already included in the, now there is a possibility the same fund, this is a fund, A, B, C are the investors, A, B, C is getting net income and C is paying the tax on the net income. Now fund is preparing their financial statement. They are asking 150 as we discussed in the very beginning. Then 100 was my principal original investment. 10 was my cost. Remaining is 40. The remaining is 40 is being apportioned in between A and B. Or there is a possibility that they are okay. They are retaining for discussion purposes 10, remaining 30. 30 is being apportioned. The 30 is being taxed at A, B, and C level. Tomorrow down the line, this fund, the what are the reserve are being retained by the fund, if they're distributing between A, B, and C, will they be liable to pay tax again? This is the question. They are asking if their income has already been subject to tax, means A, B, C, they have already paid tax on the income. If there is a further distribution to them, on the taxable income, they will not be liable to pay the tax again. It will be double taxation. So taxation will be one time only. We'll discuss in the illustration as well. There are some limitation for the qualifying investment fund. What are those limitations? Basically, these are the exempt person. We know this, that once these are the funds are exempt person, they cannot become a part of the tax group. They cannot become a part of the qualifying group. Once they are not becoming part of the tax group, means we know that what are the benefits of going into the tax group. Qualifying group, They will not be able to enjoy the restructuring relief. They will not be able to transfer the assets and liability at the book value to the other person. Along with this, losses, transfer of losses provision. One taxable person as per law can transfer their losses to another taxable person if they're under the common ownership of 75%. All other conditions are being met. So if this is the case, then they will not be able to transfer their losses as well. These are the limitations. So this is what we have discussed today. Let me go through the guide very quickly. We'll be discussing the guide, important aspects of the guide that we'll be discussing today. Few illustration we'll be discussing today itself. So this is a guide. Introduction, what are the investment funds? I'm jumping directly here. Investment fund, this is the definition of investment fund. Investment fund commonly include basically these are different types of investment funds, security, mutual funds. These are different types. You can go through this. Investor investment fund provide capital asset. They are, I will discuss A, B, C in the example. They are providing capital investment. Investment manager is there. Investment advisors are there. Custodians are there. Sponsors are there. Feeder funds are there. You can go through this. These the investment managers are getting fee in the form of management fee, performance fee, or co-investment fee. This is a structure that more or less we have discussed as well. Investment funds landscape in the UAE. In the UAE, we have already discussed. It can be closed-ended fund, open-ended fund, public funds, private fund that we have already discussed. These are different further funds given in the UAE. You can go through this. Rationale for investing qualifying fund. We have already discussed. Invested directly in the underlying assets. And this is neutrality. It will be a special purpose vehicle. It will be assumed the investment has been made by the investors directly. Investment fund and the corporate tax law and investment corporate tax treatment for the investment fund. I think we have already discussed. Important thing was investors are individual. They will not be subject to tax. Investors required a license to make an investment. Exempt income will remain exempt in their hand. Taxable income will remain taxable. And this taxability based upon either they are a resident person or non-resident person. This is they have discussed. This is all these things here. Treatment for investment manager, we say fee will be subject to tax, then it will be resident or non-resident, it will remain same. Impact of qualifying investment fund. These are the limitations that were discussed. They cannot become a part of the qualifying group. They cannot they cannot enjoy the restructuring relief. They're not entitled to provisions of transfer of tax losses. They cannot part of the tax group as well and qualifying group that we've already discussed. You need to maintain a record for at least period of 7 years. The annual declaration is required that you are satisfying all the conditions. This declaration should be within 9 months from the end of the relevant tax period. Treatment for the investor that we discussed. This is important that this could be the case if a natural person undertake investment activity that require a license from the licensing authority is considered part of the commercial business. You can go through this illustration, very simple illustration. Natural person in the UAE invest using personal savings in a qualifying investment fund where he earns income from his investment. Natural person investing from the personal saving, income from the personal investment. It doesn't require license to make such investment. It has been given income derived from the natural person is personal investment income. It will not be subject to tax. In our example, we discussed A will not be subject to tax, which that were discussed earlier. A will not be subject to tax. A is investing in his personal capacity and license is not required. Remaining income, exempt income will remain exempt in the hand of the investor. Taxable income will remain taxable, and taxability depends upon the status of the investor, resident person or non-resident person. This is very common. We have discussed so many things. Exempt person, income in the hand of exempt person will remain exempt. We have discussed the government example. Like they have given two funds, fund one, fund two. They are making investment in fund one. Fund one is exempt. Fund one is making investment in fund two. Income, whatever the fund one is getting from fund two, it will remain exempt in the hand of fund one. Now this income will be distributed again in the investor behind this, then it will be subject to tax accordingly. These four different types of income that were discussed earlier as well. These types of income, exempt income, interest income, investment from immutable property or other income. Exempt income, one knows is dividend from the resident juridical person, a dividend where the participation exemption conditions are being met. It will be considered exempt income. Then interest income is there based upon the general interest limitation rules. We need to consider this. Interest income will remain there. Income from the immutable property. We know what is immutable property, and income from the immutable property might be considered nexus for the non-resident person. Other income which is not falling out of all these above three, it will be considered other income. Investor level, we've already discussed. To the extent that net income relates to the exempt income, this will also be treated as exempt in the hand of the investor. Apple to apple comparison, taxable income will remain taxable in the hand of investor. Just look into this illustration. The qualifying investment fund has 15 investors and has allocated the net income. Exempt income is 22.5 million. Net interest income is 5 million. Net income from immutable property 15 million. All other income 7.5 million. Total is 50 million. Income has been classified into 4 categories as required by this guide. The investor in the qualifying investment fund as follows. There are 13 investors out of the 15 are natural person. It has been written here. 13 are the natural person. Holding an investment, personal investment means their income will not be subject to tax. Straightforward. Collectively, ownership interest is 20%. One investor in the UAE Incorporated, the one investor is resident juridical person, UAE resident juridical person, 40% ownership. One investor, investor two, 40% ownership. Foreign juridical person means non-resident person. The net income of the natural person will be treated as taxable income, will not be treated as taxable income as they hold their stakes as a personal investment. Investor 1 and investor 2 will include a relevant portion of net income. They need to consider relevant portion by applying the apple to apple comparison. Exempt income will remain exempt and taxable income will remain taxable based on the resident status. So this income has been classified. This total is overall 50 million. A is holding 40%, 22 into 40%, 9, 5 into 40%, 2, 15 into 40%, 6, 7.5 into 40%, 3. This one investor 1 is a resident juridical person. This is a non-resident person. Once this is a non-resident person, then their taxability in inclusion of net income by investor, inclusion of net income by investor to 40%. Not applicable, not applicable. Their next is in the UAE 6, not applicable. For investor 1, the exempt income of 9 million will not be treated as taxable. As I told you earlier, personal investment not. Other than personal investment, where license is required, entity is investing, apple to apple. Exempt income will remain exempt and taxable income will remain taxable. This income is exempt, it will not be subject to tax. That's it remain exempt. The remaining net income of 11 million, net interest, net income of property, other net income will be treated as taxable income. Investor to foreign juridical person, it will be regarded as having a nexus. Basically, this is exempt income will not be subject because the 3 types of income are subject to tax for the non-resident investor. Nexus, UAE sourced income, or PE of the non-resident person. This is not PE. Only nexus income. They said this nexus income will be subject to tax in the hand of the investors. REITs will be discussing in our next REIT will be discussing the real estate investment fund that will be discussing in our coming webinar. I'm leaving it for the time being. Time apportionment, basically where we said time for the tax period for the fund is different, tax period for the investor is different, then income needs to be apportioned proportionately. You can go through this example, they have given it here. Treatment of distributions, there should not be any double taxation if the income has already been subject to tax. XLLP is a qualifying investment fund. ALC resident person acquired a 10% ownership interest in XLLP. XLLP ALC use the Gregorian calendar year 31st December. All of the income XLLP net over a 3-year period. This is the income. Net income available for distribution 60, 10 and 100. Net income included by A LLC 10%. It is A has already included 6, 7, 1 and 10. Now this is a distribution of 50. They said distribution made by X will be 10% of total. This 5 belongs to A because A is holding 10% of 50. 5. What is the income that is already subject to tax? 7. 5 further distribution. So they said already A has paid tax on 7, so 5 will not be subject to tax. This is a proportionate principle. You can go through this. For the time being, this is over from my side. In our coming webinar, as we discussed, we'll be discussing remaining portion of this guide for the investment fund and investment manager, that will be REIT, real estate investment fund, taxation of the real estate investment fund. There are some very good examples that were conditions that were mentioned to become a qualifying investment fund. These conditions are discussed, they listed on the security exchange, ownership condition, not avoiding tax period. All these things we'll be discussing in detail. Might be the case we are getting time along with the examples, but the priority will remain, as I said, REIT, real estate investment fund. Rest of the thing, I think we have already sorted out. If you have any questions specifically, you can just let me know. Definitely it will be pleasure supporting you. No question? Okay, guys. Thank you very much, and very nice to speak to you. And have a lovely evening. Thank you very much. Thank you. Bye-bye.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.